So the pound is falling sharply against the US dollar, and most beginners are about to blow their accounts chasing that move. So GBP US dollar has hit a 2.5-month low, dropping below 1.35 in the last 48 hours. And before you jump into this move thinking it's easy money, let me explain why days like this create more blown accounts than they create big profits, and how you can avoid becoming part of that statistic. So what is actually happening and what is actually going on? So the move in the pound right now, again specifically against the US dollar, is being driven by four main things. There is what's called safe haven money flowing into the US dollar as geopolitical tensions with Iran are escalating. Scary times, I know, but you still need to be aware about what's going on and the impacts in the market. So there is increased global market volatility, which means people are panicking. And when people are panicking, they go to these safe haven currencies or these safe haven markets, the US dollar being one of them. There is continued uncertainty around Bank of England policy, because God knows what the UK are up to, and political uncertainty following on from that same theme, with no one seeming to know what's going on in the UK following local election results which have changed the political landscape, and all of that is creating unrest and uncertainty in the markets. Now, when fear rises globally, investors move money into what they perceive as being safer assets or safer places to put their money. And historically, the US dollar is considered a safe haven. So it's not necessarily that the pound is collapsing or the pound is weak. So if you are worried about that's what's happening, it's not necessarily true, although it does impact your ability to spend, especially if you're about to take a trip to the US. And it's basically money that is flowing out of risk and into safety. And that's a really, really important distinction. And what does this actually mean then when GBP falls? Let's just simplify this. So GBP US dollar is a currency pair. It's a foreign exchange, Forex, foreign exchange between the two, the interest rate between the two, or the exchange rate rather between the two. It measures how many US dollars you get for one British pound. So if GBP USD falls, it means the pound is weakening relative to the dollar. And that's because we've said GBP US dollar. You also have a US dollar GBP market, and if that falls, it means the US dollar, which is what comes first, is the one that is lowering in value, or it can be a mix of the two. So there's always two sides to a currency move, and beginners are often forgetful of that fact, or they just don't know. And this is why things can get risky or dangerous for beginners, because big red candles attract beginners. So I'm just going to share my screen and I'm going to show you what I'm talking about here. So this is GBP US dollar. You can see it's GBP US dollar because I've got it here. And we can see that this is how good the exchange rate with the US was. So 1.38, if you look to the side here, and it's crashed all the way down here to currently sat at 1.3. It was below 1.3. It was below 1.33 at 1.32 all the way down here. So this is the lowest point it's been at since back here last year, so in November. So we've got this crazy move down, but for educated investors, and how I teach my mentees and my students, is within these movements you get patterns. Individual candles, big red candles, may attract newbies, but that's not what you want to be focusing on. You want to be focusing on the patterns you can see, the movements you can see within here. That's the important thing, because that's actually what repeats regardless of the economic news. So when people see a sharp move like this, they don't think about patterns when they're beginners. They think, this is it. This is the move I've been waiting for. This is easy. I need to jump in. But volatility does not equal opportunity. Volatility equals emotional pressure. And on days like this, when spreads widen and prices move faster, pullbacks become violent. These pullbacks to certain levels, so where it's crashed and then it pulls back up to where it was before, they can become quite strong. Now that creates fake movements, fake breakouts of certain previous patterns, and these fake movements increase. This volatility increases, and that adds emotional pressure. And when spreads widen, what that means is the commission that the broker is charging increases, meaning it's actually even harder to make a profit. And so if you don't have a structured plan, you're not trading, you're reacting, and really I would say you're gambling. And that's the opposite of what I teach people to do. You have to have a clear plan, you have to stay calm, you have to stay precise and stick to your strategy. Reaction trading is where accounts get blown. People just lose their money because they don't know what they're doing. And most beginners don't lose money because they're unintelligent or because they're stupid, they lose money because they trade emotionally when the market speeds up. So there is a number one rule I have for days like this, is that if you are a beginner, the one rule you should be following on high volatility days is to risk less than you think you need to be. Really, I would say my bigger rule would be, number one, never trade without correct safety management, and number two, never trade without a system that is tried and tested, because that stops you being reactive to these new market newses or things that happen. Things might just go on. If you risk less than you think you need to, you can cut back your position size, you can stick to your rules more easily, you can wait for confirmation rather than chasing a trade, and you are avoiding that mentality of got to get in, got to make the most of it, got to do what I can, blah, 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 all of that stuff. You do not need to trade every big move. I don't trade news announcements whatsoever. I couldn't care less that the markets are moving this way. The only reason I would care is if this movement fits into one of my strategies that I teach my mentees. In fact, sometimes the most professional thing you could do is absolutely nothing. Discipline always beats excitement. And at Star Trading, we use a structured 30-minute per day approach. And on days like this, structure matters more than ever. The goal is not to catch every single move or every big candle. The goal is consistency. The goal is protecting capital. The goal is staying in the game long enough to let probability work in your favor. So beginners chase volatility. Successful traders manage risk. So if you're watching the pound fall today, or maybe oil massively shoot up as well, ask yourself, are you trading a plan or are you trading emotion? Because one is going to build wealth and the other is going to build regret. So hopefully this has helped you understand what is actually happening in the markets right now. So hit subscribe to learn more about everything trading related and how you can change your life for the better. And I'll keep breaking down live moves like this calmly, clearly, without the hype, because you can change your trading results. If you've never traded before, you can master this skill set. It's literally just a set of skills, but only if you're disciplined enough to learn. Speak to you later. Bye bye.